You're watching Europe Tonight on CNBC. Well, time now for today's big interview. And the nightmare at long-term capital management has pushed hedge funds into the spotlight. Relying on a complicated system of essentially bets, they're supposed to make high-yield returns to their wealthy investors. Although the real interest, of course, was to actually hedge bets and make them safe. But in a market overrun by bears, can hedge funds still deliver the goods? Well, that was a question I put to Dion Friedland, who's chairman of the hedge fund giant Magnum.
Historically, what has been shown is that in down markets and in mediocre years in the stock markets, hedge funds have tended to outperform as a group. Now, obviously, because of the huge variety of styles, some will outperform more than others, some will even underperform at the wrong times because there are different strategies involved. And it, of course, behooves any investor to really only invest in a hedge fund if they understand the strategy. And we would not, I'm talking about for the Magnum, our funds, we would not invest in a fund like LTCM if we did not understand the strategy, and I believe they did not disclose adequately.
That also raises the issue that there should be greater transparency in hedge funds, as well as greater regulation.
Well, as far as transparency is concerned, that is up to the individual investor to determine, in fact, just what that particular hedge fund does. They need to understand the strategy, they need to understand the amount of leverage employed, they need to understand what the hedge fund is investing in, what the hedge fund, if they're shorting and so on, and they need to ask questions. And very typically, the professional investor in hedge funds, the sophisticated investor in hedge funds, will either meet with the hedge fund or their marketing people and will get to understand the strategy in depth before making an investment.
But what about regulation?
As far as regulation is concerned, I mean, what hope does a regulator have of getting to understand this huge variety of different hedge fund styles? Let's assume there are 3,000 or 4,000 hedge funds out there. There are 3,000 or 4,000 different hedge funds. Really, you don't get to the same. Because even within a particular sector or style or type of hedge fund, the amount of leverage used will vary, the kind of equities they buy or sell will vary. It's almost the same as saying, if you compare two unit trusts or mutual funds, they are unlikely to have identical portfolios. So the best form of regulation for a hedge fund is really the lender who's lending their money or providing them some form of leverage.
What do you make of the market at the moment? Are we in a bear market, and does it have a lot further to go?
I think undoubtedly the markets will go lower. The world is really got the problems of a recession ahead. And the reason why Greenspan cut interest rates last week is, of course, is not because he wanted to be benevolent, but because he has a great deal of concern. He really understands the severity of the global problem. And I mean, the amount of wealth that was vaporized, and I use the term vaporized, in Asia is just mind-boggling. That wealth is gone. Russia has imploded. It's a disaster. Latin America has been under huge pressure. Commodity prices have fallen out of bed, which means that all emerging markets that depend on commodities are suffering. Their currencies are devaluing, and almost in a downward spiral of devaluation in order to try and get some returns out of their exports that have decreased. And then you have the problem of the Japanese yen and Japan, which, you know, Japan is supposedly the second largest financial power in the world, and there's just no power there. There's no force. There's no demand. And, you know, when one reads about bailing out the banking system and, you know, creating a bailout of $500 billion worth of yen, as it were, it's mind-boggling. But, of course, where does that money come from? They will have to reflate, they'll have to print yen, and ultimately the yen has to nosedive as a currency in terms of value. It's way overvalued against the dollar right now.
Predictions there from Dion Friedland, who, as well as being chairman of the hedge fund giant Magnum, is also president of the Hedge Fund Association. Michael Hughes, that's a point actually he was making there, and we've been discussing hedge funds for some time, that people get very twitchy and think, oh, hedge funds, they're all terrible because they're all like LTCM. Now, the point that Mr. Friedland was making was actually there are about 20 different strategies of hedge funds, some of which don't use derivatives, aren't leveraged, and aren't trying to do what LTCM was doing, which is look at the macro picture and take bets on that. They're much more focused on other areas. So are they being unfairly tarred with the same brush?
Possibly they are. I would have said the leveraging is more usual than not. So that is specific to this type of class. But years ago, hedge funds used to be called investment trusts. When investment trusts came out 100 years ago and did things overseas and geared up, nothing like the scale, I have to say, of hedge funds, they were deemed to be new, innovative, and acceptable. But even some of those went down on the basis of railroad companies in Latin America going bust or whatever. So they had their down days as well. But the thing which I think is relevant here is that there's an awful lot of proprietorial trading desks in banks. which are emulating hedge funds. Some of their members perhaps wish one day that they would be running a hedge fund. They're certainly talking to the hedge funds and to some degree copying them. So what I think has been surprising and indeed quite difficult is that the degree of leverage in the system, not just in the hedge funds, but in the banking system as well, has been on a scale that has worried people, and on the basis of that, either through regulation or indeed banks and common sense, they're not going to pursue quite the same degree of risk policies as they have done in the recent months.
Well, as far as investors go, perhaps not looking at hedge funds, but perhaps today looking perhaps at banks again. I mean, we've had financials up really across the board, obviously on rumours in the marketplace, merger speculation. But is that an interesting sector again? I mean, they were hit very, very hard, and perhaps too hard.
Maybe, yes. I think it may well have been the case that when you were not looking for the interest rate relief and you didn't know where the blood was lying on the floor, as it were, that people actually went for the safety of being away from the banking sector. Having said that, one of the issues which I think retail banks have to address, particularly in the UK, is that once they got out of this global problem, what's going to happen to their retail margins? Because normally when interest rates start coming down, it's good news for bank shares because their retail profit margins increase. And indeed, they have already been pretty high, which is why bank profits over the last few years have been equally high.